Okay, I'm here. Hopefully you can hear. So let me know in the screen if you can hear me, guys, on the chat. Nice to see you, everybody. I'm going to share my window. Okay. All right. And so, yeah, if you don't mind to tell me if you're there, hello, or we can hear you, etc. Because I never know if this if the volume works and so on. You guys can hear me? We are live. Perfect. All right. And you can hear. Perfect. All right. So let's do it. I'm going to make the screen larger so we'll not be able to see you. But after I say a little few things, I will take questions, okay? Large screen. All right. So let me read it because I want to have control. Okay. All right. Perfect. All right. So just let me give you an introduction to these indicators that I'm using. And by the way, if you're interested in these indicators and you want to join our Discord community, you can do it through it's called bitposeidon.com. B-I-B-T, Poseidon, like the god.com. And there is a section that tells you about the indicator, to explain what they are. And it's all through our Patreon program. So you join the Patreon. It's not very expensive. The basic level is just $5 because we want to give access to everybody. But all the indicators are in a package that is also very reasonable. And the beauty of that package is that no matter how many indicators I'm going to make, and I'm trying to make like once every month. For example, right now I'm working on one on ETFs that I will share it with you soon. It seems actually there is information in ETF you can use to kind of make a prediction of the prices. It doesn't always work, but 55%, 54%, something close to that, you get it right, and that is good. But there will be one on MicroStrategy, there will be one on the miner. So every month I'm adding new indicator, and all of them will always be at the same price. Doesn't matter if we have like 20 of them, will be all under the package that is like $20 right now. So please join Patreons if you are interested. Okay, I will try to do these reports every week if I can. So you can also simply watch the review. But it's nice to have indicators in particular because, like I said, they are not very expensive. You can play with them, they are interactive, etc. But this one is the simplest indicator. It gives us the power law, right? So unfortunately, it's not, I cannot say impossible because actually somebody is helping me to make a log graph on TradingView. It's actually a company called LuxAlgo that are like professionals in TradingView indicators. We're having a collaboration and they are developing a version that is log. It's now the most natural thing for TradingView because it doesn't have you see how here I can go from logarithmic to linear. See this how the Bitcoin looks linear, how the power law looks linear. It looks like a J basically, right? So when people say, "Oh, it's too bearish," okay, I think this is bearish. This blue line is bearish. It's not. Like, it's crazy. And so the power law, it's really fast, when you looked into a linear graph. But if you click this out, it does exponential, but only, unfortunately, only on the x-axis. So if you scroll all the way, it's going to look curved, right? So just only locally looks straight. But if you go and start to go back in the past, it starts to look curved, like the usual curve that we see in the log linear chart. But we are working on a log version. But in terms of indicator, it's still useful, because the formula, the calculations are all like if you were working on a log space, we get the same formula. So this is what you see, the white line. And the blue line, again, it depends how familiar you are with our work, but is what we call the full model. And the full model is basically a modification of the white line, that is a simple power law, where we do a few things. First of all, we are trying to catch the bubbles. That is basically we are introducing some kind of sinusoidal. It's not exactly a sine. It's what is called a sinusoidal. So it's some function of a sine, where it's flat in the middle, and then it really goes up very fast, but it does it in a periodic fashion. And also we introduce some kind of a decay, because it looks like if you go back in the past, the bubbles in the past were taller. And so we introduce this decay that is, again, it's all equations. That is the beauty of this. It's all calculated in advance. We are not adapting to the data as that data comes in. We are trying to predict what the data does. So, and we are trying to do it with very, very simple formula. That is the craziest thing, right? Nobody does this because even S2F is an algorithm. It's not really a formula. You cannot write a formula for S2F. This is just a formula that you can write on a piece of paper. And then you just put the time, that is the days from the Genesis block, and it gives you these curves. The white curve, it tells the general behavior, and the blue curve. So the blue curve adds the component of a sine wave, adds the exponential decay for the tops to account for this decay. Now, we don't know if a decay will continue to work also for the next bubble, but it's better to include it, right? And be surprised that the price jumps up instead of being disappointed that it doesn't, right? So I prefer to do things that are not bearish, but more conservative. And then if we go higher, it's fine. That is not the core of a theory to calculate how big these tops are. The core of a theory is the general power law. So we do it in addition to that, because it's important to have a kind of an idea where we are going. So we are trying to be as predictive as possible using all the information that we have available. Like the entire idea is, if everything repeats itself like it did in the past, then this is what to expect. Okay, so please keep in mind always this, that all my predictions are based on using the scientific method based on the data we have. Now, if Bitcoin doesn't follow these regularities, then it's not that the model doesn't work. It's Bitcoin it's not as regular as we think it is, right? Yes, the model will be wrong in the sense that it didn't do its job of predicting what we thought it was predictable, but so far it's doing a very good job. And so we can, because it's an equation, we can project it in the future. Unfortunately, the way that TradingView works, you have limitations on how far in the future you can go. So we are going all the way to the peak. Would have been nice if we could go all the way down to the bottom and have a full cycle. I'm going to see if there is a way of going around this limitation, but right now it's a current limitation of a algo. So this should be very close to where the peak is going to happen. So basically November of 2025. So this is what we project. And this is the value we think it will reach. Okay, now, is it going to be $10,000 more? Is it going to be $10,000 less? Could it go all the way to 300? Yes. And as you go farther away, another thing we can add soon, I want to work, I did it offline, but I can do it on these indicators where we can put some bands that represent like confidence level, how confident you are, right? Is it possible for the price to go all the way to 400,000? How likely is that? We can add that. It would be really cool to add these confidence bands and have some kind of prediction of what the range is and how likely it is. Now, is it possible that it goes all the way to 500,000? Possible, but very unlikely, very unlikely. It would be nice, I will not object it. By the way, it's not going to show that S2F is correct because for S2F at 500,000, that S2F predicts is actually something that Plan B almost never says, is actually the middle price. Okay, we should already be there because it's kind of like how this is the middle price for the power law. That 500,000 is the middle price for S2F. He never says that. People confuse and think that it's like a peak. It's not. It's actually the trend, the value for the trend. If you understand how the model is built, that is what is meant. So for S2F to be true, the top needs to be much higher than that. And he never says what it is, because actually S2F tell us nothing about the top. Absolutely nothing. Anyway, so if we focus on this chart, right, what do we see? First of all, it looks like in general, so the beauty of this is that we can always go back and look what happened in the previous cycles, right? So one way to do that is to use the clock. The clock here is basically our spiral clock, and it's color-coded in terms of the time. Okay, so the top it's like a clock. So 12 is it's just a convention that we choose. We call 12 o'clock. Bitcoin time is basically the historical top. Now, why is it the real top here is slightly off? Because this should be called really more correctly, the end of a cycle, right? Because if you're thinking the cycle are exactly 4 years and you stick to that convention, then this 12, it's the time when 4 years are passed by from the previous 4 years. And usually the real top happen a little bit before that, like hour 11, so not exactly in January or end of December, like here, but maybe like November, something like that. And so hour 11, we did these studies where we took all the previous cycles and we add them together, average them, and then see where the peaks were, where the bottoms were, and statistically they seem to happen usually around 11. In this case, it was much closer to 12, right? Very, very cool. And this one slightly before 12. We focus on the three bubbles because the three bubbles that are associated with the halving. And why they are associated with the halving, please watch our video. We have an entire theory of why they are associated with the halving. It has nothing to do directly with the change in issuance. Yes, indirectly because the miners are involved, but it's mostly FOMO. It's basically there is an excitement that is periodic. There are even the network properties that we calculate. We have this method to directly associate the network properties of Bitcoin with the price. At a certain point, we will come up with a model for that too, and actually indicator based on this network property. But the first bubble, it's an exception and an anomaly that we need to understand. Maybe something to do with Mt. Gox. There were a lot of manipulations. We will look it up. Because it needs to be understood if you want to understand Bitcoin. But we don't include it in our modeling. And so if you look at the clock, then you can actually look at different times, like where are we right now, for example. We are right now here. And the time is something like 7:15, close to 7:15. So this was 6 o'clock when, this was like the beginning of the year, 2024, when nothing really special happened, on the chart, but it's basically the idea that we left the bottom that was here. You see how nicely the clock actually identified the bottom, and then we leave it behind. We spend about 1 year in this region of the clock that is yellow. You can call it the bottom, but you see, because it follows the power law, we're still going up. It's kind of a bottom in the sense that we are below the trend, right? So this green area indicates when we are below the trend, and we spend about 1 year there. And so you can say that after 1 year, we left the quote-unquote bear market, and we are closer to the bottom than any other region. So this is why we mark it as an important transition in the clock. Now, the next important transition will be here. That will be what we call, so basically hour 9, that we call transition to full bull. And this is when things are going to be exciting. Now, again, because everything on the clock, it's precise based on the 12 hours being 4 years exactly, is going to happen at the end of this year. Now, the frenzy market could start a little bit early. That's why, for example, we see a little bit of a deviation there on the full model. Yes, it could start all the way to maybe end of September, so beginning of October, to no later than January. So within this range, that I know it's several months, but it's not easy to make prediction, and having that insight, ahead, Bitcoin is the only asset that allows you to do that. Again, the premise, the one important premise, everything happens like before. Everything happens like before during this region as we approach this part of the clock that it's similar to this one. So you can actually go back and check what was going on there. You see, usually just before the transition, we cross the white line, that is the power law, and things really gets exciting. And we got basically to an exponential growth period. There are only 2 times when the price is exponential, when we go up and then when we go down. Otherwise, we follow the power law. By the way, these 2 cancel almost perfectly. We can look at the other transition that was here. Again, you see, at that point, we didn't really cross yet, but we were ready. We crossed it a little bit later, so it can happen a little bit before, a little bit later. This was almost like a textbook example, because you see how fantastically we follow almost perfectly the bottom line here. That is about 60% deviation from the trend. When we got really ready, when the transition to full bull happened, we started to go exponential. This was about April, maybe a little bit early March. Okay, so it took a few months to get ready. Price started to get exciting, that a correction, and then we really went crazy. I was already climbing because of the power law. In fact, it was following almost perfectly the power law. So same thing here. So it has been repeating the same thing over and over. Okay, so if it does the same thing around this period, it should go up maybe a little bit before. It could be a little bit later if you follow the previous cycle. But we will see a lot of signs where things start to get heated up. Now, I calculated that if we continue to move more or less along the power law, now I did this calculation when it was closer to the power law, and I was thinking it will continue. It can continue to do that, right? So this is where it's a little bit more difficult to make prediction, like when you are at the bottom, when you're at the top, when there are these main transitions. When in an area like this, it's much more complicated, right? So, but in this case, I would say my reasoning goes like this: that unless there is like something dramatic in the market, and I don't see what it could be, and like what we had a similar situation in the past, like for example with COVID, we were a little bit too bullish relatively to where we were supposed to be, right? We were supposed to be much closer to the blue line, and instead, for whatever reason that I didn't have time yet to look up, but see, even if I found a reason, it's always posterior, right? Say, oh, okay, this could explain this. Now, things like COVID are much more meaningful, right? So you can give a lot of explanation. Like, for example, somebody made an observation while I was doing live chat like this, say, it's possible that this first bubble that we got here, first stop we got here, was due to the money that was released during COVID. There were all these grants, for businesses. There were different stimulus checks, etc. So many people use it, to play with the market. Some people did high leverage things and stupid things, and some clever people invested in Bitcoin. So that was good, but it probably created this fake top because it was not the right time. The right timing was here. We still had the top where it was supposed to be, but we also had this in addition. So you could have deviations from what is expected. Like here, we went above when we were not supposed to be. It corrected, and then it took COVID to bring the price all the way to the bottom. We didn't cross it even during COVID, and then we recovered. So I'm using the same reasoning here. I'm saying here in this case, again, it's an hypothesis. We don't have any real strong evidence to show that. Maybe we could look at the flow and correlate it with this price movement there. They seem to be correlated. It's possible that it's due mostly to the inflow, but also multiplied, not just the inflow directly, because I made the calculation that the inflow itself from the ETF is what we need one of the many things we need to continue along the power law. But in addition to that, there was also FOMO, right? A lot of people expectations pushing the price up, and we got all the way there. And then, weirdly enough, it didn't cross the power law. We knew that the power law was there, and it didn't cross. Call it coincidence, call it what you want. He tried many times. It didn't for many months. And now, actually, it seems that he wants actually to correct a little bit because we should not be there. We should be closer to here. We leave a bottom when we are approaching the frenzy bull market. We should be closer to that. But because we are already there, besides small corrections, I don't think we are going to all the way to the bottom. By the way, the bottom right now, it's about 37,000. Okay, and it's going to be higher and higher as we go closer to this transition point. So it took something like COVID to go to the bottom. That is my thinking right now. You can agree, disagree. If you find it useful, use it. But that is my best bet right now. That unless there is like a catastrophic event like COVID was, we are not going to see that bottom. How can we go to 55, 50? Possibly, okay? Now, we do have other indicators that give us some clue about that. Like, for example, we have this indicator that is called Hart's exponent, but it's a different version than the one you find usually on like a free indicator. It's a one that was tailor-made for Bitcoin using the power law properties of Bitcoin. It's actually from a scientific article I read on the fractal properties of Bitcoin. So we made this indicator based on that. And it kind of reads the quality of a type of returns that we get. So are these, do they look more like noise? So you took up a certain amount. In this case, we're looking about 200 days. And then we're looking at the quality of this data. Do they look like pure noise? Do they look like they oscillate back and forth? They want to go back to mean return. So mean trend, right? So they want to swing all the way to the other side. and start to move towards the mean, or do they continue with their, so they are steady, and so basically we'll see momentum, so it's kind of following the trend. The prices follow the trend, and so the way this is basically an indicator that goes all the way from 0 to 1. You cannot go beyond 1, and if it is above 0.5, it means trend following. If it is below, it means mean return. And if it is kind of in the middle, so around 0.5, maybe give 0.45 to 0.55, it's looks like noise. So you cannot tell much about the trend, the type of transactions that we have right now, the type of returns. Right now, while we were moving along the power law, it signaled a very strong trend following. So as you deviate from large number close to 1, it becomes less and less trend following. It's more uncertain. Then it becomes orange. Now it seems to curve up. That means maybe it wants to go back to the trend following. So right now we don't have any strong signals that the price wants to correct itself, because otherwise this indicator will start to go towards the yellow. If he started to go back, he wanted to go back. So it better close to the mean. So anything that tell us trend following means that it wants to continue along this direction. So if it continues along this direction, by the time we are around here, right? So this is showing here, but really calculated because I was projecting basically this line until it intersected this around here. So it should go up. It should go up because if we follow the power law, by the time we are around January, it should be close to $80,000, $90,000, something like that. It depends how low we are relatively to the mean. If we did follow the mean perfectly, this is what I calculated, that the value should be around 90. Then, of course, if we are there, then we will try to find a way to continue along the blue line, maybe in a more shallow curve. If it has a correction, then again, it will try to move along there. It's kind of difficult, right, to predict what exactly we'll do in the middle, but it should go exponential, it should go very fast up, and then reach this top. So right now, I don't see anything that tell us that the price is going to crash. I think this basically what we are going to see right now. There is a possibility that it goes all the way to 55. I will be surprised if it goes much below that. So in general, by looking at all these indicators together, with how much deviation we are from the trend, what it took last time to actually leave, go much more closer to the bottom in this time of the cycle. We needed COVID. We don't. If we go to the previous cycle, we didn't have anything equivalent to that, because. So if we go to the previous cycle, like 2 cycles away, during this time, we were just following the power law. We were actually, so all the people that are doomers and they think that there is something wrong with Bitcoin, they should have a history. History is our teacher. And at that time, we were, because of this is where we are right now, right? We are around here in terms of a color, because this color is basically tell us where we are in the cycle. So around 7, right? So this is 6, 7, so something in between 9 and 6. So we were this entire period, in fact, all the way to the bottom, to here, it was following almost perfectly the bottom. And then only after the transition to the full bull market started, the price started to be much more bullish. It had a correction. It went back to that bottom, strangely enough, and then started to go up like crazy, very, very fast. I wish we had something like that, because it was amazing. I was there. It was like super exciting. to see the price exploding that way. Now, we will have to be careful because it was also very disappointing. I still remember when actually, whoa, what happens? The price was crashing as fast as it went up. But this time we will be ready because we have all our indicators. We have these indicators that tell us the deviation, tell us we are above the threshold. We will have pinpointed the top, using these indicators. We know where we are in the cycle. We have our indicators about, you see how this starts to tell us that we're not falling anymore, we trend, right? We are going down. So all these indicators together should tell us what is going on. But right now, there is nothing to panic, nothing to be worried, nothing to be sad. It's actually, we got a little bit too excited. I knew this. I didn't want to say it too many times. I kind of said it, but I didn't want to be, a party spoiler. It's a great thing that the ETF happened. I think overall they are a good thing for the environment, for the system. There are some negative sides to the ETF, but to me, the idea is that they give exposure to people that will never touch Bitcoin otherwise. So it's good that these people get some exposure to Bitcoin. We can still do self-custody. We can do all the things we want to do. Basically, they are surrendering all these people, all these organizations that were kind of the enemy of Bitcoin, large banks, large investments. Now they surrender, they join us. So they are going to do manipulations. We are there not because they believe a cause, because they want to make money and they realize Bitcoin is the best way to invest your money. So they capitulated, so we have to be alert, aware and alert. But in general, they are a good influence, I think. But we are not going to change the overall pattern, right? It's just one of the many things we need, one of the many pieces of the puzzle we need to continue with our march to $1 million Bitcoin. But the general idea, the main reason I wanted to do this meeting is to repeat what I already posted online. But I don't see anything worrisome. These corrections will be okay. It's possible the price will go back to the trend and stop there, and maybe does it multiple times until we're ready in a few months from now to go full bull. We have not reached a peak, no way. So this is the bottom line. I don't want to speculate on other things. I started to look at liquidity. I'm not going to include it here because I'm working on that indicator. I do have an indicator that includes global liquidity. And it's the same message that if you look at global liquidity, there are signs we are going to have a major upswing of liquidity. That is good because we need liquidity for the bull market. We don't completely depend on it because also we amplify by many factors the liquidity, but we do need it, and it's part of the overall picture. And next time we meet, that indicator will be ready so we can add it and we can learn from the global liquidity too. But when I did my latest post, was all about, okay, we don't have enough liquidity. Basically, it was confirming what we see already here from the power law, that we got a little bit too excited. There is a disconnect between global liquidity and the price. I don't think that means correction. I think it means basically things are staying put until we get more liquidity available, and then we get ready. But everything looks good because even liquidity is starting to have signs that is getting ready to be higher than what is right now. And then, together with the FOMO from the ETF, together with the halving and everything else, we should go there at a minimum, I think. I think this is a realistic number to achieve. Now, if you want to look it in the linear chart, it looks a little bit more daunting, right? Because we need to go all the way there. It's much more challenging, right? When you look in the linear chart and click these. And in fact, for the S2F faithful, if you think that S2F has a chance, let me show you where that will be. It's kind of interesting to see. I mention STF because there are still a lot of people believing in that model. We need to go all the way there, okay, in this period of time, because usually we don't go much further than that in terms of where a peak is supposed to be. So how do we go there? I don't think so. Okay, it will be nice, but it's unrealistic. This is much more achievable. Okay. All right, so this is my report for today. I'm going to take some questions given we are live. If there is anybody asking anything. All right. From 1st of January, it's okay, crypto friend. From 1st of January 2025, central banks will be allowed to own 2% Bitcoin on their balance sheet according to it. Okay, so let's use this word parabolic. Maybe I am a little bit, on the spectrum for these kind of things. But parabola to me means x to the square, right? This is what a parabola is. And the power law is time, right, or x to the 6. So it's super parabolic. It's already super parabolic. Probably what you mean, it's exponential. And they are different, right? They are different because the main difference, if you want, let me explain it to you in this way. They work the same. So if you look at how the change in the power law happens and how something exponential will happen. So, for example, imagine that, for example, let's imagine the growth of Bitcoiners, because in fact that is related to the price of Bitcoin. So right now it works like this. In my study, I did all this network study. Soon I will actually have an indicator based on the network properties of Bitcoin. Basically, it works in this way. Every day, we multiply by 3 the number of Bitcoiners based on addresses. So, be patient with me. It's based on addresses, the number of addresses. But to simplify, let's say that they are proportional to the number of addresses. So 3 times the number of hashes that are right now. So you take the number of Bitcoiners now, you multiply by 3. If it was exponential, this is how it will be. Every day, we go and we multiply by 3 every day. And it will become exponential. Now, it doesn't have to be 3. It can be a smaller number. But right now, this is how it is with the power law. The reason why it's not exponential is also that we divide that number by the time that is passed by. So it's the number of days from the Genesis birth. It's exactly that simple of a formula. Every day, you multiply by 3 the number of addresses, and you divide by the number of days. It's not crazy. That gives us the growth of addresses. Now, the price is the square of that, or close, 1.75. Crazy, completely crazy. Is how crazy this stuff is. It's that precise. That gives us the power law. You get the power law. You take a number of Bitcoiners or addresses, you multiply by 3, you divide by the number of days, you take the square of that, you get the price. It's absurd. If it was exponential, you will not divide by the number of days. That division will not be there. So you can imagine how fast this thing goes, right? If we don't divide, right now the number of days is 5,000, something like that. So you're decreasing the growth by a lot by dividing by the number. It becomes less and less efficient over time because the number of days becomes bigger and bigger. So it's kind of like a curbing effect. But the only time when we get exponential behavior is during the bubble, both going up and going down. And your question is this going to change? My answer is no, because I can go back and say, okay, let's do this calculation. Number of bank, will be all based on some kind of projection. I did it with the ETFs, and I knew that it was going to be right because my intuition told me so, having worked with Bitcoin for so long time. But then I verified. And the way I did it with the ETF was, okay, where are we going with the price in the next 10 years? It's going to be $1 million. I did all the calculation. I showed it in my X many times. But basically, I introduced some impact factor on the market, the impact factor of 10. The bottom line was, by the time I calculated how much inflow we need every day, we are talking about $850 million per day. This every single day, right? From here to 10 years from now. We are not getting that inflow, right, from the ETFs. And I don't think this 2%, first of all, not all the banks will do that, right? So I think that is another thing we need, together with the ETF, together with more interest from the public, to continue with the power law. It's people don't realize how much inflow really is needed to continue on this path, because it's still very fast. So I can go back and try to calculate and look at different scenarios, say how much money the banks have, what happens if it do 2%. But I can assure you, I know that really right now we have 15 years of history where every single thing that happened to Bitcoin created the reason why we see the power law is because everything happened proportionally, happened at the right time, at the right place, at the right amount. And this is why we see the power law. So the amount of interest that this bank will have will be proportional to where Bitcoin is right now. I don't say that it's a self-fulfilling prophecy. It's a scientific theory. But why do you see this phenomena for 15 years and 8 order of magnitude? Because some reason the market respond like if it was a network. And networks grow in a certain way because there are certain reasons. I just explained to you there are these iteration processes that happen at a certain pace because that is the right pace for Bitcoin. If it was going too fast, then something will try to bring it back because it has all these self-adjusting mechanisms. So we can try and check, but it will be also based on some kind of many banks. I will have to make some rough estimates. Right now, my general approach is let's look at the data. In particular now with this model that we have, that the model that I use, I don't know if you read my latest post where I had this big breakthrough, but you can also read it in my newsletter. So if you go to bitposeidon.com, so I'm going to write it here. There is like a section with a newsletter. So I post one on global liquidity. I posted one on network properties of Bitcoin. And I had this model that allows for everything, allows for exponential growth, allows it as a general equation that represents basically all the possibility, like that T that I told you. You can have a way of making it less influential, or more influential. So you can change the parameters in such a way that you can get S-curves, you can get exponential, you can get all the possible solutions. And it's just a question of tuning this parameter, almost like you tune an instrument, right? And right now, all the tuning that matches the data tell us we are dealing with a power law. I didn't introduce in that model a power law directly, but it comes up with like the solution, the ideal solution given the observed data. But also, what we can do, in particular in something live like TradingView, we can plot here, like in a table, all these parameters. And we can see, for example, there is a parameter theta that if it is 0, means we are dealing with an exponential. If it is 1, we are dealing with a power law. If it is a little bit more than 1, then we are having a power law that is tapering off. So it will tell us we are starting to taper off, or maybe we're leaving the power law, we're going towards the exponential. So what about an indicator with a table like that gives us all these values, and basically will be like monitoring live how close we are at power law. So we say if you see a deviation from that theta to be, right now it's close to 1 instead of being close to 0. That means power law. So it becomes smaller and smaller. It means we are going more exponential. So it will be a way also to be honest, because we can have this weekly report. We can look at the table. I need to work on that. I know already how to do it. I just need to implement it. And then we can show, okay, what these parameters are. There are like 3 or 4 parameters. One tell us how close we are to the tapering. One is the theta, that tell us which kind of regime we have. The other one tell us this 3 value that I told you, that is basically how fast we are recruiting more and more Bitcoiners. So we are going to have all these parameters that are telling us about the status of the status of a network, and will be a way of telling us if we are leaving the power law, if we are continuing along the power law, and will be also an honest way, because I will show you every week and say, okay, this is where it is, this is where we are. So we can do that, right? And it will be really cool. And it tell us this is how you do science, because I'm not attached to the power law. I mean, it's beautiful. I think there are a lot of interesting consequences, but in the end, we love Bitcoin, right? So whatever Bitcoin shows us, if it decides to go exponential, okay, I trust Bitcoin. I think is a good thing. Maybe Bitcoin knows better than me. Maybe, for sure. I don't like when people impose their views on Bitcoin and they think, I want it exponential because, I desire it to go and explode and become, millionaire and billionaire and whatever, overnight. But if Bitcoin tell us that, then we monitor, right? This is how you do science. We will have a monitor and we will track it, So that is the next update that I think will be really cool to do, to have a continuous monitoring of the network properties of Bitcoin, because Bitcoin is a network. That is how it works. So right now we don't have any evidence for that. How much can the price deviate from the power law before it's not a power anymore? Again, it's not much about the these bubbles, because again, for example, even in my network model, I was able to reproduce the bubble by allowing one of these parameters that represents how many connections everybody has, like the average number of connections, how strong the connectivity in the network is. I made it a function of time, so it can be a constant, and then you get this straight line power laws. But if you make it something that oscillates over time and you kind of synchronize it with the bubbles, then you can reproduce the bubble almost perfectly. So even the bubble are network property. What changes during the bubble, that the connectivity of a network becomes stronger. So there is more activity. There are more of us are going to tell about other people. We're trying to orange peel more, or maybe the news orange peel more people. Whatever. There is much more activity. So, and this activity seems to oscillate, right? There is interest when it goes down, then up, etc. And so again, even that was showing that it's basically a network property with it basically changes over time. It pulsates. It makes it even more alive, right? It makes Bitcoin like some kind of organism that does this. It's the heartbeat of Bitcoin, that heartbeat of 4 years. Now it sounds slow, but a huge big creature is supposed to have like a slow heartbeat, right? We have it every seconds. Bitcoin has every 4 years. It's heartbeat. It's really cool, almost poetic image, right? About Bitcoin. And so the question is, how big are these oscillations, right? And right now, it seems that they decay, over time, probably because simply they are proportional to how big the network is, right? So it's more difficult to create like huge, big variations when you have an organism that is much larger, right? It's more difficult to move it around. It has more momentum, So the big question right now is this going to happen to this fourth bubble? Are we going to see the same kind of decay? We don't know, because we only had the 3 bubbles so far. So it's very little statistics. It's very difficult to do statistics with 3 samples. It's all what we have, so we try, but that is the limitation, right? So to reason about what will make the model break, once you even introduce these oscillations, because the oscillation kind of cancel each other. So in theory, it could go to $1 million and come back, it will can't be canceled. So when when you calculate all the parameters, etc., over the long term, will still tell you it's look like a power law because the bubble cancel each other, right? Now, but that also tells you that we need to for the price to go back. So the real power law is not this general trend; it's the bottom line. The general trend, we draw it there because it's kind of a compromise, right? If we go, it's a compromise between the crazy bubble, they kind of cancel each other basically, because you see how the bubble goes up, then it comes back, and it goes back to the trend. So the bubbles is almost like it didn't exist. In fact, if you took a long-term average over the long period, this average tends to the power law. We can even show it here because this indicator allows us to take moving averages. So if I go under the bolt here, and you see how I can have different averages. So right now, moving average is 2, so this just moves a little bit the price. But let's take, I don't know, sometimes we have a limitation, but so let's take 365, let's multiply by, let's take 4 years, right? That will be, anybody can do it in the red, 1,400, something like that, 1,400 days. Okay. All right. You see how now the moving average, it's so close. It will not oscillate around these because now see it's more oscillating towards the bottom, right? So it's oscillating around the bottom. So if you have the bottom is this bottom line here. You see how the curve, the oscillations are much smaller now, right? And they are oscillating around that white line there. See? So the real power law, because that is also the logic, I'm averaging the price, is tending to what, right? It's tending towards the real power law, the real trend. The real trend is the bottom. So this is another way to show that the bottom is the real trend, right? So you're making the bubbles smaller and smaller and smaller. So the real way of answering your question is, overall, if it doesn't matter how big these bubbles are, if they go back and they do the same thing and they oscillate around this bottom line, then the power law is not broken. So that is really the behavior that you want. It's not much how far we go up around the bubble, are we going back, right? That, I know it sounds a cop-out, but it's not if you follow the logic of the power law. When the power law says, hey, I don't care about these oscillations, I care of the overall trend. And it looks like if there is an overall trend, the bubble needs to kind of cancel each other. That is what exactly we see. And even if you want to do it like in another way by using like a moving average, you say I'm going to average over 4 years. 4 years is good because basically it's the period of the bubbles. Then the bubbles look much smaller. It looks almost like flat, right? And we will try 5 years, 6 years, 10 years. It's going to look like more and more flat, and basically going towards the mean. But it's not really the mean; it's the overall trend. That is this bottom trend. So really, the way of thinking is this: if bubbles are not symmetric, let's say we go up, and then we come back, and we stop there. Let's say, right? Imagine in the future, so a scenario like this, where we go up, maybe we go all the way to 300,000, 400,000, then we go back, and we go back to 200,000, and we stay there. It will not look like the power law as before. That will be different. And if it continues to go like that, then the theta, like I said before, that we can calculate is not going to be one anymore. It's going to change. So right now we have all kind of ways of monitoring what is going to happen, and if there is not this symmetry, then something is different, right? And we will know. So it's not really a question of how much the price is. In theory, you can go If it does this, goes to 1 million, and it comes back, and it goes back to where it's supposed to be, it's still there. It will be weird, because now what will be broken, it will be this exponential decay, but the exponential decay is not really part of it. Theory, it kind of makes sense, and it fits well, because it tells us that it's more and more difficult to change the system as it became bigger. So it kind of fits very well to have this decay, but it's not an essential part of the theory. It's an add-on. The real theory is that these bubbles basically cancel each other. So if that doesn't happen, then it will be a very strong challenge, if not really it's not that it tells us that the theory is not true. It has been true so far, and it's very difficult to not to accept that, because all the data tell us that Bitcoin has done this historically for 15 years, and 8 order of magnitude is not an illusion. It's not based on some mathematical mistake. It's the truth. It will tell us that there is something that changed the behavior of the system, some external factor. And then we will have to explain it, right? What was that? Was it, did we miscalculate the effect of ATF? Did some other agent came in and started to do things that we are not including, that the model doesn't explain, and blah, blah, blah? We will have to reconsider, right? Like, this is how you do science. It will say, okay, now the system doesn't behave like it behaved before. It does something different. And that is also what is good about having a theory like this, because we can compare before and after. That is a big deal that we didn't have before. So it's still useful, And so that is the right approach, to see if this behavior continues over the long term. Hopefully I answer your question. Okay. Math in science class of 2019, like Parabolic. I'm glad. Can Bitcoin destroyed fail? If yes, how? If it's an inhibitor, become worth money? Yeah, yes, of course, right? Like I say, you can start, let's say this exponential growth continues, right? Instead of coming back and being a bubble, it goes exponential and it stays exponential. Then with parameter theta, that they say when we create this, I did already the article, so you can read the article, but I want to make it an indicator, and then we can plot it in a continuous way. With people that use the indicator, we can check every day. We can do a report here once a week and tell what the parameter is and all kind of stuff like that. Then we will see the theta going from being 1, that is the value that has right now, to go closer and closer to 0. That means we went to an exponential regime. So that will tell us, okay, we're not power law anymore. We are becoming an exponential. Or if it becomes bigger, we are tapering off. We are going to reach some kind of a limit, that actually will make the behavior be even bit more bearish if you think this is bearish, but it's not. But it will mean that we are tapering off. We are reaching some kind of limiting factor. So that is the way that we will be able to know that things are behaving in a different way. But in general, the theory says that there is a reason why we did these things for 8 orders of magnitude. We did it over 15 years. And that means the mechanism, whatever mechanism created this thing, will continue to operate, right? Just have a right scale, have a right amount. There is no reason to think that things will be different because the mechanisms are not changed. And so it's not by chance that Bitcoin has done this over this entire period of time. It's like, I show this article again, is in the Bit Poseidon. There is a reference series. If you want to study all these in a serious way, I posted all these references. I'm also preparing some classes. Eventually will be like real classes that you can take with modules, etc. So you learn step by step. But if you want to read some of the books that we posted in that reference sections in bitposeidon.com, there is like a reference. Click on the reference. There is an article that talks about the growth of shells and horns and thorns and all kind of different natural structures, and they all follow power laws. And we have this example of an elephant tusk. And we have a female, a male. You should see the different slopes that are steeper for the elephant. We are plotted in a log graph because it's not a straight line. It doesn't grow like a straight line. It grows like one of these J's, but it looks like a straight line in a log graph. And the reason we do it in that way is to show how, when you look at the right way, with this from a scale point of view, so these orders of magnitude changes, then the growth is regular. And it means that there are processes behind that make it so. And it will be unthinkable to think, okay, the elephant tusk grew this amount over this period of time. Next year is going to do something different, random, it's going exponential. Maybe when the elephant has cancer, yes, he can do it, but maybe there is something weird happening with the elephant where he got cancer, or something, something weird. It will mean that something is broken, and so the same thing, that we are applying the same thinking, say there is some scientific process, there is some mechanism behind the growth of Bitcoin that has been consistent over all these years. And unless there is something dramatic happening, that is probably something negative, because this is what happens to this mechanism to be broken. It can happen, but usually it's some imbalance, because another way of thinking is that Bitcoin has found its best path. It's trying to grow, it's trying to do all the things that it wants to do, to be the store of value, to be accepted by more and more people. But if it went faster, it's like an airplane that goes so fast it breaks its wing. It's not meant that a normal jet is not meant to fly hypersonic, right? If it does, then something bad will happen to the airplane. There will be too many vibration, will be shockwave, whatever it happens, during, they design airplanes that can go faster than the speed of light, sound, the speed of sound. But we have to have the right characteristic. We have to have the right strength of the wings. We have to be designed in a certain way to actually do it. You cannot take I think, I'm not, this is a question for Salo. The physics that I know tells me that is true, but you could not take a liner, a jet liner, and make it go to a faster than the speed of sound. It will break the wings or other things. It doesn't have the structural integrity to do that. It's too big, or it's not aerodynamic enough, or whatever. So that is what Bitcoin is doing right now, because it's the most efficient path. And so it will mean that something went wrong. So that is what the theory says, that right now this is the best path, is the most balanced path, it's the fastest that it can grow without breaking or without collapsing on itself, etc. So there are reasons why we it's different from any other type of prediction, because the type of description of a model is already including the fact that it's predictable. That is what is called scale invariant. This is why I make this big deal. It's not like, it's some kind of path that maybe it has happened so far. Let's continue. No, it has very precise property, and one of these properties, it's predictable. You see how it works. It's very different from anything else and people predicted before, even stock to flow, because stock to flow depends on this. If it's wrong, because I'm repeating all the time that it's wrong, but even the premise was, given the reduction of the issuance as is supposed to have this effect, you don't know, because once the issuance becomes so small, like for example, it's possible that even if it works, that it doesn't. But even if it works, right, just from a logical point of view, by the time the issuance is so small that it's not going to affect the price anymore, because the volume of normal transaction are so much larger, a further reduction in the issuance is not going to change the price. So it's almost logical to think that at a certain point, even if it works so far, but again, I repeat, it didn't, then SOF will not work anymore. But with scale invariance, no, it's actually more time it goes, more it confirms that it has been scale invariance, is larger to change, it's more difficult to make it do something different. Now, if we are talking about, okay, does it mean that it's going to go all the way where Bitcoin is $100 million? No, because it's a question of order of magnitude. If it goes another order of magnitude, we're talking about $1 million, but it's just one order of magnitude over 8, that Bitcoin already did. So it's not an unthinkable thing to think that it goes another order of magnitude. Actually, it should be relatively easy. Now, 2 order of magnitude, it's more difficult because we are starting to go towards limits of how much money is available, how much liquidity there is, all kind of difficult. So 1 million, I'm pretty sure. 10 million, a little bit less, much less. So right now, let's stick with 1 million. Once it's a million, let's celebrate. Let's all meet somewhere and have some huge pizza or some nice Italian food and, spumante and celebrate. And then let's look at the next 10 years, yeah, right now I think that we are on very, very, very solid ground, that this process is going to continue. And it's great because when, the philosophy that we have, that we think is a good idea once we reach these peaks to take some gains, and sell some of your Bitcoin and rebuy at the bottom. Don't do it with too much of your assets. Maybe do it with 50%, maybe do it with 40, 30. So if that happens, then we can identify these bubbles. We can identify how far we are. We can do all these kind of things, and we can multiply your Bitcoin by a lot. So everybody, when people want the Bitcoin to be broken, what do you want to be broken into, right? Something that is chaotic and we don't know what it's doing and it's doing all kinds of crazy things. I would rather to continue to do these, even exponential to what, because there are many types of exponential. Inflation is exponential, it's very slow moving, because it sounds fast, but in comparison with Bitcoin, it's slow moving. So I would rather Bitcoin to continue to do this, but then we are scientists, whatever Bitcoin does, Bitcoin does. We are studying it. We are learning from Bitcoin. We cannot impose our vision on Bitcoin. We want to study and learn from Bitcoin, But right now it sounds that it will continue to do this for at least the next 10 years. May call too easy. Yeah, no. And, and this is why many people, even the banks, don't do the 2% thing. That is part of the deal, because if it was like this and everybody knew that this was true, everybody should invest in Bitcoin, every single person, right? Like, it will be completely illogical not to do it. But many people are illogical, they don't, even if you have all the data in front of them, they don't trust the data, or they don't understand the data. So yeah, and Bitcoin being destroyed. Yeah, of course, right? There are a lot of things that can go wrong. Right now, it's one of the most robust systems in the world, right? All this being decentralized, all that energy that is connected with it, all the money is becoming stronger and stronger. I think we are very past beyond almost anything that you can imagine beside, nuclear war. So when actually I am one of the few people who says, if there is a nuclear war, forget Bitcoin, because there will not be Bitcoin. It needs infrastructure, it needs computer, it needs, we will go back to be, if we survive at all, if there are a few thousand people left. I like life extension, but I don't know if I wanted to live in a place, because you will die anyway. Right now, there is a chance we don't die, that technology makes us not to die. With AI, etc., maybe find a way to go back and be young again or whatever. If you go back in a world like that, you die, within a few years anyway. All of us will be gone. Maybe some young people will survive, and and you start civilization from scratch, and hopefully don't do stupid things like we did, you know. But it will be all horrible. Yeah, I love mining. If you have, I don't know the economics of it. From what I understood, it's not very economical for a single person to do that. Like if you are a company, it's a different business. I want to understand mining more. Like I have also an explanation. It's not network property like hash rate. You know how hash rate works. If you are curious, why we see a power law. The power law is price equal hash rate, the square root of the hash rate. And why we get that? So it's another way of writing that is hash rate equal price square. We get that because it's just a simple simulation that you can do. It doesn't come from a network property, or at least not directly, but it goes in this way. The price goes up. That brings more miner proportional to the price. But then what happens is that we get two ways of making money. We get from the price, but also because we are bringing more hash rate, that increases their productivity. So, but then there is the difficulty adjustment that reacts to this increase in hash rate, and so it needs to adjust both for the price and for the increase in hash rate. And so basically it goes with the square. So it's price square, hash rate equal price square. So I did a simulation where I did that. I basically increase proportionally every time the price went up, increase the hash rate proportionally. And then I say, well, but we need to adjust for the fact that there is more hash rate, like basically the difficulty adjustment. And so it by itself, it created this relationship by creating this simulation, this iteration over and over again. I got that the hash rate is equal price square. That means that if the price goes up with the 6th of time, hash rate goes with the 12th of time. It is absurd. It's completely absurd. We need to bring more and more hash rate to the system over time. So I need to understand it better, the economics. Does it even make sense? It would be nice to actually make some kind of a diagram. Like what will happen if you invest certain amount of money in a miner. Of course, with a company is much more efficient. But yeah, I think every Bitcoiner, and sometimes we have even these little miners that you can keep on your table, etc. So it would be even cool symbolically. I have a node because I think it would be consistent for every single Bitcoiner to have a node. If you really want to support the network, want to make it more stable, it's also cool, to have a node at your home. You can run it on a separate machine. I run it on my computer, but everybody can run it on a separate machine. Everybody should be like a supporter of the cause, right? Adopt YouTuber, do all these things that support the network, because the theory demonstrates that more activity there is in the network, and everything like this, you watching this channel, you're incrementing the activity in the network. You're watching other YouTubers supporting one of us online, with tips or Patreon or whatever. You increase the strength of a network, and this is what makes us different from other stupid things that are not network, and or they don't have a strength of a Bitcoin network. So do everything possible to support the network. Mining is cool, so not necessarily is the most now if you find a way of getting solar energy and mining through your solar energy, more things you do like these, even symbolically, cooler it is, right? It's fun. If some friends come, some people eat their house with the miners when it's cold, so do whatever is possible to support the network. That is, think about it every time, right? Anything I do in the network is going to be multiplied by this effect, right? Because the price is actually the links, and all the activities that are happening in the network. It's actually the price. is how I model it. When you read that article, you will see I went from the addresses, I simulated the growth of the addresses, and then I got the price by calculating how many links there were in the network. That is amazing, like again, nobody has ever done that. It's so an incredible result. And it's really interesting because it shows that Bitcoin is different from anything else. Yeah, it's good for Bitcoin. So if you want to do it, even symbolically, it's cool. I think every Bitcoiner should have a miner, me included. I need to get it myself. Even something small, symbolically running in your home. Maybe you can turn it off when it's too hot or whatever. Yeah. At a certain point, I will look it up. That's maybe make a diagram. How much does it cost to have an average Bitcoiner to run a miner? Does it even make sense at all? What is the cost of it? What we lose doing that? I think mostly it's the idea will be the money that you buy, that you use in the miner, or even the electricity, you could buy Bitcoin, right? And that is probably a better, for the small person, it's a better investment overall. But we throw money at stupid things all the time, so trying to support the system, and at least indirectly, even like I say, symbolic. If everybody had a miner, that would be really cool, like even as a proof of concept, would be really nice. Now, then you create competition. I don't know if that is a competition to the miners, but it's an ecosystem, how the Bitcoin clock works. Okay, so well, we have a full version, right? I don't know if you saw that full version. I'm kind of afraid of switching between one thing and another, so I will not do that. But again, you can find it. Maybe I can give you maybe the link. It should, if you go under BitPoseidon. So BitPoseidon is going to be a hub for everything. So if you go under BitPoseidon, in fact, you guys can follow along there, bitposeidon.com, right? And then there is a place. In fact, let me try that. Let me do first these, and then we can go and show the chart, because there is a section that says charts. And if you go there, then there is the round version of the clock, right? And it's easier to see it in the round version, like the one that really looks like a clock. This one, and the main reason why I don't switch is because I'm afraid to lose where I was. I have so many tabs open. But what we did here in this indicator, we try to reproduce the clock as linearized as possible. What does it mean? Because now you want to compare it with the chart above, right? So it works in the same way, but it's a little bit different. Right? There are these bumps, right? And why there are bumps instead of, first of all, because it's not impossible. In fact, I'm working with a company called Luxalgo that are preparing a clock on TradingView that is the real clock, like round. I don't know how the heck they did it, because they don't share the code with me, but it's incredible that they were able to do that. It's not ready yet, but we have it offline, online, but on my website. So if you go under charts, you click on the clock, you will be able to see it in the round form. What we see here, it's a linearized version of that. So imagine I take the hand of a clock, and now I project a shadow. Basically, you're taking what is called a sine, right? So you can take the sine of a cosine. So if you project the shadow of a clock on the y-axis, you get the sine. And then it's a way of representing the oscillations, right? Because the shadow will become smaller or big according to where the end of the clock is. If it is midnight, the shadow will be 1, will be as big as the end of the clock. If it is 3 o'clock, the shadow will be nothing, So, and if you go all the way down, it will be negative, if a shadow can be negative. So it's an analogy, every analogy breaks at a certain point. And so imagine I'm showing that sine waves, right? It's a way of bringing the clock on on a strip like this, right? Because we cannot, at least I don't know how to make it in a round thing. Also because in a round thing will be difficult to, like here you can see, oh, the clock does this, the chart does this, these are deviation from the trend, everything is aligned. So it's a good way of transforming that round thing into a linear thing. And then the other element, in a sine wave, you will have these going negative at a certain point. I decided, I don't know if I made it more complicated than it needs to be, to flip it. So now it's positive. So imagine I take the sine wave, I flip the negative part where now it's positive, right? So basically I took the absolute value and now it's positive. And the reason why I did it in this way is more consistent. Otherwise, if it goes negative, people will think, oh, that is a bottom, when it's not a bottom. The bottom is actually here. It's not at the bottom of sine wave. So now, of course, people think that like this is many times, many times people tell me, oh, then this means it's a top. No, it doesn't mean it's a top. It's like a crucial point in the sine wave. The top are indicated as top. So how the clock knows? Look, when I do something that is cool and is incredible, comes up like the power law, the power law, even there, I didn't do anything special, right? Log chart, but it has meaning, etc. Other things, when are not that meaningful, I will tell you. Then it's like a little bit of a trick. The trick is we make it so, right? So we synchronize the top of a sine wave to the first bubble that we have. Now we don't trick all the other, right? We make, once you align the first one, all the other are getting aligned by themselves. That shows how regular the cycle is, because if a cycle was not regular, they would not be aligned, right? But we kind of cheat a little bit, if you want to call it cheating. It's not cheating, it's just, what else can you do, right? You synchronize and in fact here we say, well, we could have chosen the real top and synchronize it to the real top. We synchronize it to the end of the year. We say, well, it's close enough, this end of the year, let's make it the end of the year. So basically it's kind of a calendar day where closest to the real top, where the real top happens. And then by convention, you just call it 12. We could have called it whatever else. We just make it the top because it kind of makes sense, right? The 12, it's on the top. It's a convention. So you call it 12, then you will think that the top is 6 hours later, right? The opposite. No, it's not, because in this clock, every year is basically 3 hours or 90 degrees, in the clock. So 90 degrees or 3 hours are basically 1 year of real time or human time. So it takes usually 1 year to go from the top all the way to the bottom. Now, is this the perfect bottom? No, it's the bottom becomes as close, because this is the bottom here, and it took a little bit to reach it, but basically it's 1 year late. It's kind of the historical bottom, if you want, the 1 year later bottom or whatever, because we're trying to give different information from the chart, right? It's more like from a time-wise point of view, this is the closest to this particular place that also corresponds to the bottom. And so same thing with these transitions is basically 1 year later. So 1 year later, we are going up and up and up because we are following the path of the power law. But so you can not really call it, being in the bottom. It's the bottom in the sense that we are below the trend. So you can call it, you could have used another terminology, whatever. But so in this case, if you're thinking bear to be below the trend, bull above the trend, we spend 1 year there. It's kind of a crucial place in the sine wave, when we reach the bottom of the negative part of the sine wave. So we color code it in that way at 6 o'clock. So it's a way of marking different places in the evolution. Then this one, usually you see something happening, because like here you see we left the the trend at the bottom, and we started to go exponential, and this is when the real bull happens, and so on. And you can see right here in the clock, these bumps became bigger and bigger because of the radius of this clock is basically the price. So as the price became bigger, the radius of these bumps became bigger and bigger and bigger. It's proportional to the price. But all timing is based on this regularity over 4 years, and we keep it quite rigid. There are maybe ways of making it a little bit more flexible, also because you have to understand a lot of things in Bitcoin happen based on block time instead of real time. And block time is these 10 minutes blocks, right? And sometimes they are a little bit longer, sometimes a little bit shorter. So, a certain number of blocks that are roughly equivalent to 4 years. So discrepancy between the human time and Bitcoin time are also explained by this fact that Bitcoin has really is on time. The reason why we don't use block time is because it's very difficult to make a prediction. You don't know how long these blocks are going to be, so it's better to use human time to make prediction, and it works pretty well. You have to be a little bit flexible. This is why we use more than one indicator. When you use all of them together, and you have a timing, you have a deviation, you have a type of trend that you get, you put it all together, you almost pinpoint these bottoms and tops. That is really what we like to do. Hopefully that explained you how the clock works. Yeah, it sounds to me more familiar to use hours instead of pi. You could say 2 pi, and you can have a cycle based on 2 pi. Sure, one could do that, but it's more easy to use 12 hours. What is the price prediction for what? For the top? It's written there. It's close to 200,000 for the top. Now the bottom will go down. Once we are reaching the bottom, we should go close to 70,000, close to 70, maybe 65, 70,000. So we go to 200 and to 65. So this is what is happening in this cycle. All right. Thank you for your great questions. We almost went 1 hour and a half. I like to discuss things with you, but let's keep it to a reasonable time for the people that are going to check this later. So unless there is a super urgent question, one more, anybody, if you don't have a critical question, then we can end here. And thank you so much to follow. Hopefully we can do this every week. Okay, thank you. Bye, guys. See you soon.